Japan's financial crisis just exploded. Ladies and gentlemen, welcome. Tonight we dive into a financial abyss. What you're about to hear may disturb you, because this isn't just about one country. This is about the domino that could bring down an entire system. I'm Felix. And tonight we look at how Japan's financial crisis has quietly, inexorably exploded. 1. The perfect storm brewing. Japan is no stranger to economic trauma. After the bubble years of the 1980s, when real estate and stocks soared beyond all reason, the collapse left wounds. But today, we are not revisiting the past. We are staring into the vortex of what's unfolding now. Here are the ingredients of this perfect storm: an aging population, shrinking workforce, a government debt to GDP ratio that dwarfs many others, over 230%, decades of ultra-low and negative interest rates, pushing investors into and keeping them in unthinkable risks. A currency, the yen, under pressure and global capital positions built around that weakness. In short, Japan has been playing an extremely dangerous game. All the pieces were placed, and now the trigger has been pulled. 2. Why just exploded? The trigger points. A. The debt monster. Japan's government debt has reached some of the highest levels in the developed world. As of recent estimates, gross debt is above 1,300 trillion yen, about 235% of GDP. This isn't theoretical. Debt servicing will consume huge portions of the national budget, leaving less for everything else: infrastructure, social welfare, pensions, the very fabric of society. B. Interest rates rising uncomfortably. After decades of near-zero interest rates, the Bank of Japan, BOJ, is under pressure to act. Inflation is creeping in, wage pressures are appearing, and the low-rate regime is starting to crack. Once rates begin to rise, the cost of rollover debt, government borrowing, and all previously cheap credit becomes a drag. In an economy already fragile, this can be lethal. C. The carry trade unwind for years. Plenty of global capital borrowed in ultra-cheap yen, invested in higher-yield assets abroad. That carry trade was built on Japan's low-rate foundation. Now, as yield spreads shrink or reverse, the risk of massive unwind is real. Imagine capital rushing out of yen-denominated assets, flooding back, destabilizing local bond markets, then leaking into global markets. D. Deflation, stagnation, and the lost decades legacy. Japan has been stuck in low growth, low inflation, often even deflation, for decades, the so-called lost decades. When you're already weak, any shock, external or internal, hits much harder. The economy has less buffer, fewer options, and rising fragility. 3. What happens when the explosion goes off? A. JGB, Japanese government bond meltdown. When investors start doubting Japan's ability to service its enormous debt, yields begin to spike. Suddenly, what was considered safe becomes toxic. The bond market is the foundation. If it cracks, the roof comes down. B. Cross-border contagion. Japan is deeply integrated into global capital flows. A shock there will not stay contained. From carry trades to global bond markets to currency wars, the crack in Japan could become a global fissure. C. Currency collapse. Runaway yen weakness. If faith in Japan's economy falters, the yen could collapse. That weakens imports, driving inflation, drives up costs for Japanese consumers, and forces even more borrowing. D. Social collapse. Pensions, welfare, aging society. The consequences are not just economic. Imagine pensions that can't be paid, social services cut off, rising unemployment among the young while working age falls. In a society aging faster than most, the fallout is wide and deep. 4. Why this matters to you? You might say, this is Japan's problem. Think again. Because the shockwave travels. Because we live in an interconnected world. If Japanese debts strain global banks, those banks will strain your economy. If the yen collapses, safe havens shift, currencies adjust, inflation migrates. If capital flees Japan and floods the US/Europe, asset bubbles inflate and then burst. If confidence evaporates in one major economy, contagion psychology sets in. In short, what happens in Tokyo doesn't stay in Tokyo. 5. The darkest scenario, imagining the collapse. Let's get grim. Let's imagine the worst case. Because in the darkest hour, you want to be prepared. picture this. The BOJ, forced to hike rates after inflation surges. Suddenly, Japan's debt servicing cost soars. Bond yields spike 200 basis points. Foreign investors dump JGBS. Carry trades unwind. The yen tumbles. The Nikkei stock index crashes. Social services buckle. Pensioners in Japan see payments cut. Young professionals flee the cities. Credit cards decline. Defaults rise. Now picture this shock arriving in the global system. Banks leak. Interbank lending freezes. Currencies shudder. Central banks scramble. The US and Europe feel it. Emerging markets feel it worse. Global trade stalls. And then imagine you are living it. Prices at the supermarket rising. Retirement savings shrinking. Your job at risk. Your country's economy shifting beneath your feet. 6. Why it may already be too late. Some experts argue the trigger is already fired. For decades, the policies were stretched, the risks ignored. The debt kept growing, the tools kept being used. Now the margin of error is gone. From recent analysis, Japan's debt-to-GDP ratio tops 230%. The carry trade drag is engaged. The economy's underlying growth is weak. Demographic collapse is real. When you wait for perfection before acting, the crisis often hits when you least expect it. And then you're reacting to chaos, not shaping it. 7. What Felix recommends you do. I don't want to scare you just for the shock. I want you to act. If this crisis is real, and I believe it is, then you must prepare. Diversify your assets. Don't rely solely on one country, one currency. Hold some liquidity. When markets crash, cash becomes power. Stay informed. Global events matter, even if it's Japan's problem. Consider safe havens, but don't assume they'll always protect you. Plan for inflation and currency risk. If the yen collapses, ripple effects are real. 8. Final words. The tone of the future. This isn't about panic. This is about awareness. We are looking at a hidden explosion, a financial crisis in Japan that has just exploded, but with shockwaves that radiate across the globe. The systems we rely on, savings, pensions, currencies, global credit, are vulnerable. The old certainties no longer apply. Remember, crises don't announce themselves with sirens. They creep, they build, they boom, and by the time you see the blast, you're already in the firestorm. So, will Japan recover? Maybe. Will the world shrug it off? Doubtful. Will you be ready? That's up to you. Thanks for watching. Hit subscribe if you want me to keep digging. Comment below your thoughts. How vulnerable do you feel? What are you doing to prepare? Stay sharp, stay vigilant, stay ready. See you next time.